Hello, everyone, and thanks for joining us on this Silver Stock Investor interview today. We have the pleasure of speaking with Frank Holmes, CEO of US Global Investors. Frank's with us to discuss his outlook on the economy, on precious metals, and in particular silver. So Frank, welcome to Silver Stock Investor.
It's great to be with you and happy holidays.
Thank you, same to you. How are things in the Lone Star State?
Fantastic. The weather's good. Everyone's always concerned about COVID, but it seems that people are doing a good job managing. We're in San Antonio, Texas, so we're a military city and we have additional hospitals so that we have a lot of people from the rural area coming in here if they get sick.
Excellent, excellent. So you're in many ways serving the country.
We are.
Absolutely, great. Frank, I want to start by saying that I'm a big fan of US Global Investors. I'm a shareholder in some of your ETFs, and I'm a big fan of the quality of the data that you guys produce. I must admit I make good use of it very regularly in my own research. And with that, let's get started.
Well, you're very kind, and thank you. And we put a lot of effort into it. It's a collaborative effort. So I have a vision, and I have my investment team, and every Friday they look for the data points this week that impacted the three strengths or weaknesses that could have impacted gold or Eastern Europe or Asia. And then we look for an economic data point coming out next week, which could impact and we identify that as a potential weakness an opportunity or threat. So it's a SWOT model applied like you do with sports. Look at last week's game and then future game.
Exactly. Yeah. No, it's very useful. I think it's for a lot of people, even perhaps less experienced investors. It's a great sort of overview on, like you say, on a weekly basis, and it gives you a good way of kind of seeing what's happening out there. What does everything boil down to? What I really need to know, and where are my opportunities as well.
Thank you.
Absolutely.
Look at opportunities like silver.
Exactly. So Frank, let's start by having you, first of all, 2020, we're almost at the close. It's been extraordinary in so many ways. The events it's brought are probably, hopefully for many, in many ways, a once in a lifetime kind of event. Give us your outlook on the economy and on the overall macro environment, if you could.
Well, at US Global and in all of our perspectives, as we say that we believe that government policies are a precursor to change. So we try to create complexity into simplicity, and it's a binomial model. So when we look at government policies, they're either going to be monetary or they're going to be fiscal. And monetary policies are going to either be money printing or the cost of money, real interest rates. That is, what the government's going to pay you on their 10-year government bond, take away the CPI number. Is it really positive or is it negative? These have big ramifications for overall economic growth. And then on the fiscal side, it's taxes and regulations. Regulations are an indirect taxation on the flow of money. Taxation directly is when they're going to raise the payroll tax or the income tax or corporate tax. That does have ramifications in the economy. So we try to monitor that.
Wonderful. Yeah, no, that's certainly an original approach, and obviously it's worked well for you. So
it does. So what we're sharing with you, your question was, I'm trying to give you your listeners an understanding that we have a structure and a discipline, like a pilot's checklist has to be consistent. So what has happened this year, and what's been actually going on for the past 21 years? For the past 21 years, there's been a growth in the approach to applying MMT, modern monetary theory. And it's different in South Korea versus Prime Minister Trudeau in Canada wants universal income versus the US, and how they respond to each crisis as they've taken place for the past 21 years. What's most interesting to me has been from a macro stage point is the central bankers of the G20 countries. They have their own sort of club, central bankers club, and they quite often they last longer than prime ministers and presidents do in countries. their term. And so this their power has been growing in the past 20 years because anything that's modern monetary theory, MMT, is basically giving more power to central bankers and politicians to see that pivoting. And what you've seen this 21 years is that gold has been up 80% of the time. And it's really hard for a lot of people to fathom, but gold has outperformed the S&P more than 2.5 times for the past 21 years. It's been a great performer. And the largest hedge fund in the world, Ray Dalio's Bridgewater, has always advocated an exposure to gold. And we've always advocated that position, the 10% golden rule, that it's just prudent to own some gold and gold stocks, quality gold stocks, and rebalance and recalibrate. Because this concept of MMT, as it's growing, is actually making, as a currency debasement long-term mechanism, and it makes real assets like gold and silver and platinum and palladium much more important as an asset class. It's also driven up art. Andy Warhol's art has gone up over the past 20 years substantially with all this money printing.
Yeah, you know, I'm certainly of the same view. It's almost like it's a loaded train that's barreling down the tracks. The brakes are no longer work. We're heading in that direction. We're not changing it. And you know, I think you know, just sort of one stat that comes to mind is if we look at global debt. By the end of this year, I was just reading recently that we're looking at almost, I think it's $280 trillion. These are just numbers that are mind-boggling. They've gotten to the point where they're kind of almost beyond comprehension. But you know, what really matters is what is the bottom line? What does it mean? What are the implications? And more importantly, what do we do to protect ourselves?
Peter, a data point that just shocked me and putting things in context. Time and money. So we hear $1 trillion here and $1 trillion there.
Right.
What is 1 trillion seconds?
I'll let you answer.
1,000 years.
Wow.
So people are like Teflon towards trillion here, trillion there.
Right.
When you put it in the context of time, it's massive.
Exactly.
And so this money printing has got to have ramifications globally, and the swing of politics more to that sort of socialistic model. And it's interesting for me to witness that and the use of political correctness. And you see political correctness if you're in Russia, you just can't say anything negative to Putin, or you become radioactive. And in China, if you are even a billionaire, they're putting you away in jail for 17 years.
Right.
So what this idea of political correctness in North America, when will that swing that all of a sudden the politicians get control of that agenda? All of this stuff is all fascinating, and it just says history is replete with these cycles. The characters change, but owning gold and having it as an asset class is just really important. And I say this very confidently, that having 10% and rebalancing once a year is just wise. And it's shown that for the past 21 years. The world's not coming to an end. Right. And it's not that the gold can go to $10,000 because there's a global crisis. No, it's going to slowly, gradually climb higher and higher. And on the back of that's going to be the other precious metals like silver are going to get that warrant on gold, and they're going to trade even faster when gold is in an uplift.
You know, I certainly agree. I'm editing a silver-focused newsletter, Silver Stock Investor, and for that reason, I'm certainly very bullish on silver. And so maybe you can speak to what you see for silver in terms of your outlook and relative to other assets as we go forward.
One of the important parts when you look at silver and platinum palladium is, in addition to being precious in that category, especially in the element table, along with copper, is that same column, is this money printing start to show up in industrial. So what happened is, one of the things I write about every month is PMI. PMI is Purchasing Manufacturers Index. GDP is a lagging indicator. PMI is a leading indicator. And it's a reflection of the future. and you can see that the correlation of commodity demand with PMI and energy is extremely high. And what we saw with what took place earlier this year on the virus and the crisis is China was first to basically see its PMI crash to the lowest level in 30 years. And then they turned on that spigot and they start that money printing, and it's rebounded first. The US comes next, and they've rebounded. Europe is still struggling in that process of trying to rebound. But what we notice is that when we look at the world as a macro stage, is China and India, affectionately known as Chindia, is 40% of the world's population. And that is important for consumption of food and consumption of gold. If we go back 30 years ago, when their global GDP footprint was so small and their GDP per capita was less than $1,000, you can see that they represented 10% of gold demand globally. Now, today, their GDPs per capita and purchasing power parity are up and rival their China, India, and the US. So what does that mean is that their consumption of gold has also risen dramatically, that today they're 53% of all gold. And I call that the great love trade, because a lot of that gold consumption is for family, it's for love. They wear their gold, they wear their jewelry, they have their sculptures, etc. And I think that every time gold's gone through a correction, you can see the love trade kicks in and the consumption picks up by the rising GDP per capita. Well, all the money printing in China to turn their economy around, it shows up in consumption. So that's an important part. And then we all of a sudden see copper prices now are 8-year level. Well, why is that? China and America, they're 40% of global trade. China and India are 40% of global consumption. Now, China and America's PMIs have been rocketing. They've been pulling up the global PMI, which went negative and has turned positive. Then you see the oil prices bottom, you see steel prices bottom, you see copper, and you see silver. So silver and platinum and palladium, they have an industrial demand, which is bigger than gold. And so we see that those rising GDP per capita, all of a sudden, silver has this huge run in the summer on the backbone of on gold rising, but PMIs of China and America turned positive in June. And they've been growing. And that's very important for global economic activity. So all this money printing is starting to show up in these rising PMIs. Bad news is good news. Bad news for Europe, lockdowns all over the place. And guess what? They're talking about another $1 trillion of money printing. Well, this will show up in the PMI numbers. It will show up in the commodities, and it will show up in higher end discretionary goods spending.
Frank, you know, over the last couple of years, I guess, or so, China and India have become bigger and bigger consumers of silver. In part, I guess, a lot of it is the investment and jewelry aspect of it. Can you speak to that a little bit?
Yeah, it's no doubt that that's very important, but China's big import of silver, it appears to me to be much more industrial driven because of alternative energy and the growth of solar panels.
Exactly.
So that's a huge, big demand part of that cycle. Silver falls because PMIs of China fell. They're importing less silver. All of a sudden, they turn on the spigot. They get their PMIs back expanding over 50 again. And silver all of a sudden starts rising. And it starts rising more rapidly because not only is it gold for money, that what I call the fear trade, which is 40% of all that demand, is basically fear driven. 60% is industrial. So I think when you have industrial and you have negative real interest rates, this is a double head, basically not headwind, but wind hitting your sail if you're owning silver and gold.
Agreed. And so what kinds of implications do you see of that for silver equities? Anything from, you know, the large caps all the way down to the juniors?
I think it bodes very well. But what's important when talking about the industrial space, or I'll call the gold public companies and silver companies, is that in the last cycle from 2001 to 2007, gold stocks, silver stocks, they far outperformed gold and silver. And after the crisis of 0809 and up to when gold even ran to 1900, there was a change of really poor equity fundings, and there were many poor acquisitions. They just bought each other up. And so what's happened since 2011 is quants have entered into the stock market, and they represent something like 70% of all trading. And they really are agnostic to money printing. They're agnostic to companies, they're gold or silver. Their religion that they follow is really growth in revenue per share, growth in cash flow per share. Does the company have the discipline to have free cash flow? And in our business, are they growing the reserves per share? And what we notice in our research is that something like 40% of the GDXJ had done all these mergers and acquisitions that destroyed the revenue per share growth. They destroyed. So as actually they fell, they would say to you, hey, Peter, our revenue is now double. But on a per share basis, it's down 30%. Their cash flow, oh, it's triple. On a per share basis, it's off 30%. Guess what? The quants look at revenue per share growth. They look at cash flow per share growth. And are they aligned with each other? And then if management can throw off free cash flow, they all of a sudden buy it. Growth funds, great newsletters or news publications like Investors Business Daily, IBD. They have the CAN Slim model. They're looking for that revenue per share growth, cash flow per share growth, EBITDA growth, earnings per share growth. And if it's not growing Q over Q or year over year, you don't meet their discipline of a great growth stock and they kick you out. This year, we're seeing a complete different paradigm where the universe of all gold stocks, when I look at the data of the 100 gold and silver producers we track around the world, at the end of September 2019, their median, they had a negative free cash flow yield. That means that they didn't have money to increase the dividend. They didn't have money to buy back stock. They were just treading water. And come March of this year, we saw 20% of the S&P 500 cut their dividends. The free cash flow yield of the S&P crashed, and you had this huge bifurcation of money going into stocks in the S&P where there was growth in revenue per share, growth in cash flow per share, and if there was free cash flow, they were bid up. So a lot of the S&P lost. Technology stocks went through the roof, and so did gold stocks. Gold stocks became the great performer because it was the first time in over a decade that the universe of gold producers and silver producers had what was called that free cash flow yield. And then we started Barrick announcing that they are promoting and marketing their story that they have a free cash flow yield, Yamana free cash flow yield. You're seeing companies talk about this, and then start showing up in IBD. Franco-Nevada is one of the top 50 biggest stocks in the IBD 50 for growth in revenue, high gross margins, high cash flow. You're seeing Kirkland Lake, which is the highest operation business, and they look at gold production, and they start getting this new traction. So I think the capital markets have all of a sudden seen the generalists come in, and when the generalists buy gold and silver stocks, it's always a bigger boom in this cycle. So I think the fact that we have better discipline by boards of directors and CEOs of the importance of any M&A work cannot destroy that revenue cash flow per share, because if you do, you're going to lose investors. And the discipline of doing it attracts Warren Buffett buying Barrick. Why? Because it had those metrics.
That's exactly the point I was going to bring up. If that's what Warren Buffett and Berkshire saw in that case, I guess late spring and early summer, that whole shift towards big profitability and attractive dividend yields, and made for that switch over to actually finally move into the gold space. And I guess I'd ask you, if Berkshire does this, would you say that it's because they see this as a longer term trend, or just something they can take advantage of for a few quarters?
No, I think it's a longer trend. I think that the Buffetts of the world are not gold bugs. They think the world's going to come and end. They bet on long-term growth, and governments will adapt and adjust and buy revenue and buy cash flow, and by companies that are smart in how they're growing their dividends. I think that that's what they're more focused on. And Barrick has got a strong leader. is a PhD, and his PhD was in platinum in South Africa. Dr. Mark Bristow. He's a guy's guy, likes to go hunting, as a South Texas. He's a real smart person, what he's done, and he knows the narrative. He's got to show that revenue, cash flow, and that free cash flow. So that attracts big buyers. In Franco Nevada, basically Pierre Lassonde is now retired from it, but what a visionary he was. Pierre Lassonde from Quebec, you think of what he's created, along with Seymour Schulich. These two guys are massive philanthropists, highly successful in the industry. They took and created Franco Nevada, which has gross margins like Microsoft, and has a policy of increasing their dividends. They have financed so many juniors. I think that if you look at Kirkland Lake, they also have a royalty on Kirkland Lake. So Kirkland Lake's been a great winning stock, but so has Franco Nevada. Franco Nevada's sheer size has attracted the Ray Dalios, their organizations buying this sort of company. So I remain extremely bullish on gold stocks because the boards and management are more focused on the metrics which will attract bigger pools of capital. One of the reasons why I created GoAU, which is 30% the big royalty companies. And after that, it's all quant driven every quarter to recalibrate those stocks that really protect that revenue per share growth, cash flow per share growth, and reserves per share growth metrics. And I found on my back testing, they outperform by a wide margin than buying just a basic index. So I think that we're in a wonderful cycle for gold stocks and silver stocks. And I think that as long as management stays focused on those metrics, every time we run to a newer high in gold, we'll see silver follow with it. It'll make a new high. We're still a long way for silver to ever go back to 1980s 17-to-1 gold silver ratio. But I think we'll probably see it get down to the 40-to-1 ratio, and as gold trades through the $3,000 an ounce level.
So yeah, I think we've gotten a great overview of the whole space. Clearly, you're a precious metals bull, as am I. And full disclosure, I own some GoAU shares. Have held that for a while, and very happily, and will continue to hold. And Frank, thanks for that perspective. Do you have anything else that you'd like to wrap up with?
Yeah, I think that I've also been known for crypto mining, and launched the first public company mining these virgin coins so that we don't have this AML risk, anti-money laundering concern, because when we validate a transaction, we get paid in that new coin. And we've expanded into Quebec. Next expansion, close the next deal. There will be, if we get this deal done and shortly, will be New Brunswick. But I think that the crypto mining space is very attractive, and it's all part of the Andy Warhol art going up. It's the part of these other asset classes and millennials coming in. But I think what's really important as I end this is to share with you is that in the 90s, we had baby boomers, my age, and they discovered tech stocks and mutual funds. And we had this huge growth. Today, the millennial is so significant for the discovery of ETFs and microcap stocks, and Robinhood in particular on their toolbar as gold as an asset class. So you've seen a lot of millennials come in, and it's okay because they're speculating. When you buy a junior gold stock, or you're a silver stock or a crypto stock, you're a speculator. That's a much greater risk, and you should only be doing that when you're younger. And what's important we've seen is price discovery. So as more of them come in with these minnows, it helps the whole ecosystem of price discovery. Then bigger traders come in. And so we saw that in JETS, where it went from 35 million in assets to $3 billion in assets in the past 10 months. It's been unbelievable growth, but it was really ignited from millennials all of a sudden participating in the ecosystem and driving the attraction of more capital, that they've been investing more money than stock buybacks. So I remain very bullish on overall the stock market because the ecosystem has expanded.
Again, thanks so much for your point of view, your perspective, and lots again of some very, very good thoughts in terms of the whole, the macro and some of the specifics, especially when it comes to precious metals, crypto as well. Again, thanks for your time, Frank. It's been a pleasure, and let's do this again soon.
Great. Thank you.
All right. Cheers.
Bye.